Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and it is March Madness, the first day of March. The brackets are busting all over the place as crude oil, gold, silver, all exploding to the upside. Wall Street taking it on the chin today. So many things happening out in the world today. We've got the State of the Union address from the president already. Get ready. I think we're going to hear be prepared to pay more and a lot more when it comes to the pump. Unleaded gas futures. I will say this. It's a new contract today. This is April contracts, but again, this sets the retail price for gasoline almost 40 cents a gallon higher than yesterday. Essentially, it's a precursor in the next 2 weeks. This is what you're going to see at the pump. So whatever you're seeing today, add 30, add 40, add 50 cents, could be more. Unleaded or crude oil futures skyrocketing higher today as once again Ukraine and Russian sanctions, and it's really just simple math. There's no way to replace Russian crude oil. There's just not enough of it. There was already not enough of it before this thing started, and now there's even less of it out there as sanctions are taking a hold. The Dow's down 400 plus points. Oil at up almost $9 here. 104, almost 104.50. Brent crude almost 106. Unleaded gasoline futures. And this is before taxes, before all of this stuff. $3.14 a gallon here in Arizona. Add about a $1.20 to that price. So here in Arizona, we're going to see probably 4.25 plus. In those of you up in North Scottsdale, right, this gas price is going to be closer to $4.75. All of you on the Front Range, very, very likely that number is going to start with at least a 4. Colorado tends to have a little cheaper gas than Arizona, Jason. But this thing is going to get worse before it gets better. The longer this thing goes on, I told you all yesterday, this is the worst possible outcome. The best possible outcome was don't do it. Back off the NATO thing, back off the EU thing, get Putin to settle down. Nope, we didn't want to do that. The next best option was this thing was already over. Right? Russia comes in, puts in the puppet regime. It only took a weekend. Jason, we have the worst case scenario playing out.
That's right, Joe. And the biggest question, at least for this show, is will gold hold above 1920 like it was positioning to do last week? And then, of course, everyone started selling all the Russian assets. And where do I put the money, Joe? I don't buy gold. I'll just throw it in the market and then watch it go down the next week. And
well, let me tell you right now, gold almost $1,930. Silver high. We've been waiting here. Silver above $25 here, $25.09 here in New York. Again, that is the $25. Silver holding 25. Gold over 1920. Both of these things, if we close here at both of these levels, we're going to see much higher prices already. Goldman Sachs was out this morning already calling for all-time record high gold prices now, as this thing is not going, I guess, the way that a lot of people were hoping for. This is a situation where it's going to be very interesting to see what Joe Biden says today. But based upon what I'm seeing in the markets this morning, I don't think it's going to be a very positive message for the American public.
Yeah, Joe, I'm expecting like he did last week, and I think he'll continue. It's like, man, this is going to be rough. This is going to be rough sledding, man, and then things are going to get so bad, and those bad Russians, it's all their fault. So get ready. And here's the other thing, Joe. How long is it going to be after this speech? A month, maybe 3 months, 6 months before he starts pushing for higher taxes on top of inflation. That's a good combination, right?
We've got an incredible combination. Remember, the Fed is going to come out. By all accounts, they're going to be raising interest rates at a time when, again, on the inflation side, by the way, wheat futures, and of course, I told you this, wheat futures, all-time record high. Obviously, Ukraine, a big source of wheat in the world, not to mention, not to be, to minimize, aluminum is another major thing that the Russians provide, and now they're saying, hey, the cost of that 12-pack of beer gonna get a lot more expensive. I don't buy soda, so I don't know what soda cost anymore, but I got a feeling whatever the price is, add another 50 cents, add another $1, a 12-pack. And hopefully not more than that, Jason.
That's right. This is why you buy gold and silver, because you put all of that hard-earned money and all that time and energy that you save that little bit at the end of your paycheck, instead of having it sit in the bank and get devalued, you put it in gold and silver, and then you can keep up with that 50 cents per bottle of pop, right?
Yeah, exactly. 800-951-0592. Get your fingers ready. The best special of the year is going to happen next. Don't touch that dial. 800-951-0592. The Russians now have the 3 largest population centers in Ukraine essentially encircled. Kiev maybe not 100% encircled, but convoy, they're talking a convoy some 40 miles long. The second and third largest cities are completely encircled right now as well. Don't know if they're still in Ukrainian hands or not. We've got the State of the Union coming up. J.P. Morgan, and we were wondering when this was going to happen. You can't take, and again, Russia, obviously a lot of natural resources, but they're not a global superpower as far as, GDP and all of those things. And they've done a masterful job of trying to get out of I'll call it the banking system of the West. But still, there's hundreds of billions. And according to J.P. Morgan, $500 billion of debt tied to Russia floating out in the world today, and says, hey, disconnecting them from SWIFT isn't the cure-all, end-all, be-all. You're going to create some problems for a number of banks. And obviously, Jason, the first thing that comes to my mind, well, if J.P. Morgan's saying it, why do I have a feeling they're one of these banks that's going to suffer from this?
Yeah, I think that's correct, Joe. I mean, it's having this happen, no matter what the reason going on in Ukraine, is going to scare a lot of investors. And since all of the so-called good guy nations are all locking arms against Russia, they're essentially, it's a small economy, Joe, but it's a significant economy that they're just locking out of the system. If they actually go all the way, they haven't gone all the way yet, but if they do it all the way, that's a significant thing. That these markets are not strong enough to deal with such a thing.
No, I mean, remember the hiccup in 2019, at the end of 2019, ended up being a $2.7 billion tranche of debt that got the Fed back in buying debt and bailing out banks very, very quietly. And, of course, through Freedom of Information Acts, we realized that they were doing a lot more than what they were saying that they were doing. And now, and again, and I've been warning about, hey, don't have too much money sitting in these bank accounts because, you know, let's face it, the rules have changed. It's a bail-in policy, not a bailout policy. And now all of a sudden you're going to take a country, like I said, Russia by itself, we're like, okay, they're not a mega power, but you're essentially telling the banks we're locking up, and according to J.P. Morgan. So if he's willing to say, hey, there's $500 billion of debt payments that aren't going to get made, why do I get the feeling the number's even bigger than that?
Yeah, I think it's going to be a lot bigger than that, Joe. We suspect the repo market that are possibly putting $1 trillion in loans to these banks every week. I mean, even if the number's half of that, starting in 2020, Joe, that's why you get Ukraine, Russia. Because you got to have something break. Something has to break if you're throwing money down a dark hole to just to soothe your system and kick the can down the road, Joe. And I don't think the can's getting a lot heavier now.
Yeah, the can is absolutely getting a lot heavier. The Dow now down 450 points. So you think about, that big rally they saw on Friday. And again, all that money just getting crushed right now, between, yesterday it rallied back a little bit, right? And finished down just under 200 points. Now we're down almost 500 points. Essentially all of that new money that got put to work, seemingly getting, absolutely eviscerated here in about 48 hours time. And of course we're waiting, the State of the Union and the president today. But again, I'm just judging the market reaction. I think the president is going to be telling the American public that, hey, we're just going to have to suffer, through much higher prices at the pump. I mean, think about this. 15 gallons of gas could be running you $65, $70. And that's just short term. Listen, the longer this goes, there's people out there that know more about this than I do. And again, remember, we already told you, we have record low inventories. They say if this thing goes through the end of the month, they're talking $200 a barrel oil. Right now, oil's $104. So essentially they're saying, hey, double it.
Yep.
So what does that mean at the gas pump? I mean, 15 gallons of gas could be $100+.
You could be looking at 2,400 gold going with that too, Joe.
Well, yeah, exactly. I think Goldman's got it right. They're calling for all-time record high gold prices, and they're calling for it quickly. So before the break, I told you that the best deal of the year. Sometimes it just works out this way. We've been doing this for 26 years. We had one of our own customers was a liquidation that came through yesterday. We ran a sale on 20s at $2,195, which, man, what a great deal it was. And at the time, that was $35 off. Gold's up $30 right now. So think about what we're going to do today. I've got $120 $20 gold pieces. 120 of them. I don't have 121. I don't have 130. I got 120 of them. We're going to run it at yesterday's price again. So we got another $30 move. You're talking about $65 less. There's not that much margin in gold. You don't save $65 on anything. but we're going to do it, but we're going to actually do one better. So 1 through 19, $21.95. You buy 20 or more, $21.85 at 800-951-0592. Right now, gold's about $130 away from its all-time closing high of 2,060. And again, news out today that this thing's taking much longer, more sanctions. J.P. Morgan coming out and saying, wait a minute. This is going to cause problems. He also said that Russia is going to be able to circumvent the SWIFT system. It looks like, though, Jason, based on what is happening today, it looks like there is now support for them to throw Russia out of SWIFT. If that actually happens, I think we'll see all-time record high gold prices almost immediately following if that announcement happens. But it looks like the Germans, who had been the holdup here, are coming on board. Russia, by the way, Russian military is now telling the Kiev, whatever enunciation you want to use, civilians to evacuate the city. So this is another development here in the Ukraine battle. Crude oil prices, like I said, skyrocketing. They're anticipating more global reserve releases. We've already been releasing from the strategic oil reserve. Jason, I don't think it's going to have any effect because we can't release 7 million barrels a day because that's what we need to offset what Russia's done. Right.
Probably just get worse from here on out. But let me speak to possible new gold buyers, somebody that's been looking. There's so many, I get so many phone calls now about guys that are trying to figure out, and they're, that Joe, they don't have all this information. They're not as well educated as the guys that listen to the show for years on end. But let me just give a little historical data, which will tell you why you're buying gold at a great price today. Because the whole thing, if you're not a gold buyer, you think, well, yeah, but what if tomorrow it's only $800 an ounce and it crashes? It's not going to happen. And instead of going to all the reasons, let's just go to year opening. There's a 100-year gold chart you can always open up and see all the different things, all the different numbers of where gold spot price is. And only five times has gold opened the year over $1,500. The last 3 years, it's opened over $1,500. The other two times it happened was when gold spiked in 2011, and in the 2012 and 2013, it opened above $1,500. We've had 13 straight years of gold opening over $1,100, so it's never going to go below that again. It's not been an opening year below $900 since 2009. So as an inflation-sensitive metal, which gold and silver is, it's just going up. It's going up. It's going up. And to have 3 straight years of it opening over 1,500, it's not going back to 1,200. It's not going back to 1,100. It's not going back to 1,000. And what we're seeing, if you're saying, man, I don't know what to do with my money, you got to save it in a place that protects your savings. So this special today is a great place to start doing business with us and get into gold. I mean, this you got. If you've been listening and you're still kind of gritting your teeth and you're scared, once you buy gold and you start holding it, all those fears go away, Joe. At least you're saved money. You just the gold and silver customers at Patriot Trading Group, they're the most relaxed, confident people I've ever met in my life. They don't worry about their money, Joe.
Well, they don't have to worry about it. And again, we've been here. This is our 26th year in business, and really it's simple because we treat people the right way. This is. I'm going to tell you right now. I've never been more bullish on gold and silver, and I've been doing this. This is my 20th year. Never been more bullish. This is going to be one of those. It was already going to be one of those years. At the beginning of the year, go back to the first show I did of the year. I told everybody that would listen, buy it and buy it now. Gold is going much higher. And again, gold's only been down 3 years in the last, 20. Every single time the year after gold's down has been one of the best years for the price of gold in percentage terms, and this year was going to be no different. This is way before we knew anything about Ukraine, right? They weren't even on the radar yet, and this just changes everything as far as what I thought was going to be versus what is now going to be. This changes things, and it changes things in a direction. Pretty simply put, I think this adds hundreds of dollars to the gold price this year. And I already thought, listen, I did easily. We were going to be at new all-time highs this year. Now add hundreds of more dollars to that. This is something where, at the beginning of the year, 22, 23, 2400 seemed logical. Throw that out the window. Is it 2,700? Is it 3,000? Is it more than that? 800-951-0592. It is the absolute special of the year. 800-951-0592. We just had a couple of phone lines clear up. U.S. $20 gold. This is the deal of a lifetime. And again, just great timing here for all of you out there. $20 gold pieces, 1 through 19, $21.95. 20 or more, $21.85. Gold is now up $33, $19.33. Silver's up 84 cents here, approaching 25 and a quarter, as crude oil has taken off. We're about $2 away from the Russian invasion of Crimea. And I don't know that Russia actually invaded Crimea, but remember Crimea in 2014.
Yep.
Oil got to 105, 106. And we had none of this. So this is going to listen, oil's not stopping here. This is going to get a lot more expensive. We just hit the April crude oil futures and unleaded gasoline futures. I've never, ever, and again, like I said, I've been doing this 20 years, seen such a discrepancy in a single day. Yesterday at the end of, I don't know if it was a February contract or a March contract, because I don't know the oil contracts as well as I know the gold and silver contracts. Unleaded gas, and this is wholesale, paper, right? Not physical. This is paper unleaded gas, was $2.70, $2.75. Right now, it's at $3.13 in a single day. So this is something where, again, we are going to see action at the price pumps that I don't think most people are even aware are going to happen. And my guess is that the president, who has done this already, warning about, hey, Americans, you're just going to have to suck it up here and pay these higher prices. And it's not just crude oil. Wheat futures, all-time record high this morning. Already, all the beverage makers are warning that because of aluminum prices, that the cost for your favorite canned beverage is going to be also significantly higher. On top of that, Jason, we've already have sky-high inflation. Nobody, but probably, really, when you think about it, the only ones that were telling you this was going to happen, and this was going to happen without this invasion. This invasion, take everything I was saying about crude oil futures and add 20, 30, 40, possibly $100 a barrel to it. These inflation numbers are going to be so much worse now because of it. It's going to be really interesting, the trap that the central bank is in, Jason.
Yeah, Joe, I got two things. Well, last year, how many times did we say, well, things are looking really bad, you guys better get ready? Boy, you just add an emergency to this, and then what's going to happen? Remember us saying that, Joe, over and over again? Oh, it's really terrible now, but what if there's an emergency add to this? We're talking hurricanes and things like that, war, and here we are, right? And number two, Joe, if gold spot was at $2,400 right now, what would we be selling these coins for?
Oh, that's a great question.
Probably $2,700, right? Probably
$2,700, maybe $2,800. The thing is, and this is for all commodities now, the paper price doesn't actually reflect the physical price. We talked about in oil last week when oil was in the mid-90s. That physical barrels of oil, if you wanted to physically buy a barrel of oil, you could not buy it for $93 or $94. It was $100+. Think about today, actual physical crude oil. If you didn't order enough, you tried to hedge, but today you're like, okay, you know what? We hedged 80%. We always leave 20% unhedged. I got to buy that 20%. You're probably paying $110, $115 a barrel, right? Unleaded gas fees, I'm talking about $3.13. If you physically need the gas today, you could be paying $3.25. So this is all going to be indicative. We're going to see this playing out all over the place. This is, we're talking about inflation. Man, I don't even know what to say. We're already at record high inflation if you tracked it like it was the 70s. We may actually get there with this new methodology, which really just defies logic, that we could get to 15, 16, 20% inflation with the way the Fed, because they don't even really try to track inflation anymore. Jason, this is going to be just one of these years. Of course, here we are. It's the first day of March. Of course, March, symbolizes March Madness and the NCAA tournament. Well, March Madness is going to have a whole different meaning this year.
Right, and when it comes to gold and other commodities, there's a margin that you pay above what the producer cost is. And the margin on these coins above the spot price is not so bad. I remember, Joe, I think it was you and Eric years ago, I don't know how many years ago it was, but talking about when gold was spiking in 2011 to $1,900, and the margins got pretty intense because it was getting harder and harder to find the physical gold. I think it was $400 or even $500 above spot to get an ounce of gold because it was just spiking so fast. We're nowhere near that, but wait until everybody really wants to buy gold, right, Joe? Those margins could go to $400, $500, $600 over spot to buy an ounce of gold.
Yeah, well, we see it in the silver markets, and you're right. Gold is at least of the precious metals markets, probably as far as that goes, priced the best as far as being able to buy it
right now.
Relatively, relatively closer to the spot price, and that's not going to last. There's no way that lasts, especially when we're starting to see the banking system now starting to say, hey, wait a minute, we've got problems. Now the Ukrainians have the sympathy card of the world playing out, and I think the rest of the world is trying to, and who knows what the end game is here, right? And trying to prevent not just Russia. Listen, this is also going to be what does China do with Taiwan and all of these things. I think the powers that be are like, man, we've got to take this super hard edge. Which, again, is just going to drive more and more people to gold. $20 gold. We got a couple lines open. They've been ringing all day. 800-951-0592. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. And U.S. 20s, they are going fast. And I'm not surprised. $21.95. You buy 20 or more and you're going to be down to 21.85. Gold is now up 35, 36 here, 1936. Silver's now at 25 and a quarter. We may be at that 1970 level. The Dow's down over 600 plus points and rising. Crude oil up almost $10 now, over $105 a barrel. Get in and get your gold put away. We could see it. Listen, I'm telling you right now, don't be shocked to see $2,300 gold before the end of the month. Here at $21.95, this is it. This is the opportunity of a lifetime, because essentially what we've done is taken away the last $60 in gold move on top of, right? We just had oil just absolutely explode to the upside. You got the ass clown coming out tonight. Let's see how many times he forgets what his own name is, right? You've got this perfect scenario here. Put him away, 800-951-0592. And again, Jamie Dimon out today warning about Russia and SWIFT and debts, and saying $500+ billion that somehow, my guess, Jason, is before the end of the month. I wouldn't be surprised if you see the central banks going back to quantitative easing even.
They may not even have a chance to raise rates if this is the biggest emergency in all of human history, if that's what they're going to try to sell it as. And I'll say this, Joe, there's two things. I think Joe Biden ends up coming on TV tonight. I think he's going to be alert, and I think he's going to be serious, and that's much worse than Sleepy Joe. And the other thing is, if oil can go up 10%, I just saw the number, it just went up over 10% in one day. Gold can do the same thing. Things get crazy, and if gold goes up 10% from where it's sitting, that's $1,900. That's $190 move in one day, Joe. These things are going to be able to happen. You know, I'm sure it's happened before, Joe, but I've not seen oil go up 10% in a day. That's some crazy moves.
Well, and again, it's actually very simple. If you deny countries from buying Russian oil, that's 7 million barrels. Now, obviously, the Chinese are going to buy it. What is India going to do? But Russia actually supplies about 35% of their oil to other countries.
Yep.
And this is the problem. There's not 7 million barrels of oil out there. Heck, there's not 3 million barrels of oil. There's not even 1 million barrels of oil out there. So this is something where, and again, this is a situation that is going to get much worse before it gets better. I think that they've lost complete control of this thing. This is the absolute worst possible outcome. And I get it, right? You get everybody, they sit on their hands, they get nervous, they don't know what to do, because they see things like this and say, well, this is just temporary. This is not temporary. You can't go back and make up for these barrels of oil. And by the way, this is assuming Russia is willing to sell it.
That's right.
This is assuming we're going to do all of these things to Russia, and they're not going to turn the gas off to Europe, that they're going to continue to try to sell their crude oil. And again, almost impossible. I think this is the worst game of chicken the world's ever played, Jason.
Russia is about 10% of the entire oil market worldwide. So it just makes kind of sense, Joe. If they get completely shut off, whether it's their choice or the nation's arming against them, 10% move in oil, 10% of the oil, the worldwide oil market, Joe. I mean, it's the Dow's moving towards 700 points down. I mean, this is what we've been talking about. And I'm going to go back to it one more time. We said that the markets are weak and terrible and things are going to go in the wrong direction in 2022. And just imagine if there's an emergency that you add to it, another COVID breakout, a natural disaster, or a war. These are all the favorite emergency bells that they'd like to hit us with, Joe.
Yeah, exactly right. And again, gold continuing now to move higher, up 36, make it $37. Again, silver sitting right there at 25 and a quarter. This is a big day for the silver markets. As Jason said, the Dow down 675 points. Crude oil is now up $10 in change, $106. Unleaded gas, $3.15. So again, that probably puts prices here. Arizona prices $4.35. And man, I just don't know. I don't know. The 10-year note has completely collapsed. This is another interesting dynamic here. The 10-year note down to 1.69. German bond yields have gone back into negative territory. So this is just an absolute rout. This is something where I think for a lot of people, they're starting to really quickly figure out, all the things that we were hoping for this thing to not be that bad. We actually got the worst case scenario. Forget about the best case scenario. This wasn't even middle of the road bad. 800-951-0592. Patriot Radio News Hour, final segment coming up. 800-951-0592. I got two lines open here. $20 gold, 1 through 19. 2,195. 20 or more, 2,185. Already, and just right on cue, another price increase coming from the wholesalers today. Gold right now, 1936. Silver, 25.23.
Joe,
Dow down.
Let me jump in real quick. If you're ordering these coins, 800-951-0592. So I know we're getting a lot of callers because once in a while I get calls here at the radio station, Colorado. Make Jason's life a little bit easier if you could just call 800-951-0592, because anybody that tries to order and leave a voice message, because Christina's not in yet, I have to just take those calls and order them for you over at the 800 number. So you'll save yourself and myself some time if you just call 800-951-0592 and get the order placed there for us. Joe?
Yeah, exactly. It just makes things a lot less complicated. Plus, we're limited. Once we're out, we're out. You know, we had 120 of them when we started the show, and they're flying out the door. This is, and again, circumstance happened to be one of our clients needed to sell today. If without that, I mean, we'd be looking at, we'd probably be at 22.50, and I'd be telling you, everybody, hey, tomorrow they're going to be 22.75. Because unfortunately, as the longer the day goes on, seemingly the higher the oil and gold prices are going. So the wholesalers are going to react accordingly. If the gold price and the silver price go higher, they're going to raise their prices. It's just that simple. And again, I think this is something where we're going to see moves that a lot of people don't want to see. And I say this all the time. And I know a lot of our, yes, finally, gold's going to react here and do this. No one's going to like it. $3,000 gold is going to be tough. This is what gold's that metal that says, hey, things are going to be tough here. When you look at it, right, we knew 2021 was kind of the illusion because, right, still the government was sending out checks to everybody and all of the stimulus that was out there. It held back the paper gold price. But all of that's gone now. Now, what are we talking about? We're talking about embargoes and kicking Russia out of SWIFT and of course we've got already sky high inflation, and now the Fed has no choice. The bond buying finally going to come to an end, and allegedly they're supposed to start raising rates, and now we have a super shock to the system all at the same time, Jason.
Yeah, and there's a lot of volatility in these markets right now, but if gold holds or just closes above 1920, you can start seeing $20 a day going up as a regular occurrence. So yeah, that's, it teased us last Friday. It was above 1920. It was racing, and then they had the huge sell-off, and the markets went up, and all that stuff with the volatility, which is not a good thing for markets. We close above 1920, Joe. Who knows what tomorrow brings or every day after.
Well, and again, remember, why did that sell-off occur? And I'm trying to tell you, because they were really thinking exactly what I was telling you. Hey, by Monday morning, Russia will have gotten this thing all handled and done with. It didn't happen that way. It went the other way. We've got a lot more upside to a lot of these commodity markets. 800-951-0592.